Welcome to Dubai Property Talks, the podcast where we check the pulse of the Dubai real estate market. In this series, we break down key trends and give you insights you need all in a 5-minute format. In each episode, we dive into one critical topic to help you better understand the fundamentals and gain perspective as an investor. My name is Idris, and today I'm joined by my colleague Sufyan, who is also one of the partners at Sandwater Real Estate. So let's get straight to it. What makes the current market different from 2008 and 2014? Sufyan, every time we see a price increase in Dubai, people start asking, is this a bubble? Why does that keep happening?
So it's a good question. It basically comes down to people's memories of the 2008 crash, where the prices fell by 60%. 2008 market was mainly fueled by access to easy credit with very little regulation. It was widespread off-plan flipping and a massive speculation-based demand. But it's important to understand that 2008 crisis was a global meltdown, not only a Dubai real estate crash.
And what about 2014?
So in 2014, the market was again mainly driven by Expo 2020 announcement, which created an investment hype and foreigners seeking quick returns. But just like in 2008, the market was driven by speculation and not fundamentals. The developers were flooding the market with oversupply. Even the oil price crashed, and the market corrected by 40% over the next few years. So whenever the price is at all-time high, people think it's just a matter of time before the bubble burst.
Right. And you said that locals in particular tend to be hesitant. Why is that?
Yeah, a lot of locals are still waiting for a crash. They've seen what happened before and are waiting for prices to fall again. But it's important to understand that the fundamentals today are completely different.
You mentioned the fundamentals. Let's unpack that for a moment. How is today's market different from the previous ones?
So, unlike 2008 and 2014, our assessment is based on data that last year's peak was not speculation driven. It was built on global investor demand, regulatory reforms, and a maturing market in general. Another difference is who is buying and how they're buying. Back in the day, it was mainly regional buyers, people from the GCC and India. Now we're seeing more international investors, especially from Europe, US, Asia, and even Australia.
So this shift in the types of buyers is having a big impact on the market, right?
Yeah, exactly. Today, over 80% of the transactions in the luxury segment are cash buyers. The majority of the market is cash driven. The mortgage ratio is still relatively low compared to other cities, and that's a big change. In the past, a lot of people were borrowing money just to flip properties. I even heard of brokers putting down only token amounts before reselling properties at a premium in the secondary market within a very short time. So with cash buyers dominating the market, even there is a slowdown, we are unlikely to see the same level of forced sales and or panic selling that occurred in previous downturns.
So no matter what, those cash buyers have the liquidity to hold on to their properties, and this makes the market less volatile.
Yeah, and that's a huge part of why the market feels much more stable now, even though the prices are at all-time high.
Right. And not only does it feel more stable now, it is much more stable. And rules and regulations have played a big role too. What changes have we seen there?
So in the past, there was almost no regulation. Developers could basically take the payments and walk away if things went south. Now everything has to go through escrow accounts, which are regulated by the government. And the market today is also much more data-driven and transparent. For instance, thanks to platforms such as DXB Interact.
Yeah. And the risk of fraud or bad actors is much lower today.
Yeah, exactly. And there are also restrictions on the reselling. For example, buyers have to pay a substantial percentage, like 30 to 50%, before they can even think of flipping the properties. That ensures people are more committed to their investments.
And even on the supply side, we are not seeing the same level of overbuilding as we did in 2014, right?
Yeah, and that's also another major difference. Developers have learned the lessons and now release projects in phases. In fact, there's currently a shortage of ready properties, but this year we expect more handovers of projects which were launched in 2021 and 2022, which could help create a better balance between supply and demand.
Right. When we look at Dubai's real estate today, it's still more affordable than other global cities.
Yeah, Dubai is still a bargain, especially when you compare it to places like London, Paris, New York, or Singapore, where prices are 3 to 4 times higher. Not to mention, Dubai has zero capital gain tax and no annual property tax, which is a huge benefit for investors.
Dubai's rental yields are among the highest in the world. I just saw how Dubai has surpassed even New York.
Yeah, exactly. That's why we're seeing more long-term investors and wealthy individuals from all over the world coming here. They see stable returns, good business environment without the additional tax burden.
So, Sufyan, if an investor is looking at Dubai's real estate in 2025, what should be their biggest takeaway?
So the most important thing is to stop waiting for a crash. We may see natural cycles, corrections. Some areas might even cool off or stabilize, but there's no sign of a crash like in 2008.
And in this dynamic real estate market, it's a lot about location. If you're investing in prime areas with limited supply, like for example, Dubai Harbor, Palm Jumeirah, Dubai Hills, or even downtown, you're making a safe bet.
Not only location, but also the developer plays an equally important role. At Sandwater, we believe in rarity, and our experience shows that beachfront properties often tend to perform better, mainly due to their exclusivity and limited supply, as you mentioned. And of course, getting the right advice is key to make an informed decision.
Great. That's all for today's episode of the Dubai Property Talks. Be sure to subscribe and stay tuned for more insights into the Dubai real estate market.
And if you have questions or want to explore investment opportunities, feel free to reach out.
Thanks for listening, and we'll catch you next time.